All right, everyone, how are you? Hopefully you're well. I've got a pretty cool video for you today. I'm pretty pumped about this one. This is training an AI agent to make buy-sell decisions on a portfolio of stocks, and we're going to look at a strategy based on moving averages and relative strength index, right? So it's abbreviated RSI, relative strength index, and the moving average basically is just showing you um, over time, what is the average price of a stock? Is it moving up? Is it moving down? Is it when you take these averages, right? You don't see all the choppiness. You don't see all the busyness of the day-to-day movements. You just see like the average over whatever time period you pick. Common moving averages can be 10 days, 30 days, 50, 200 days. These are pretty common too. I think 50 and 200 is probably the most common. But basically, it shows you the average of the stock price over the past 50 days, and is it trending up? Is it trending down? What direction is that stock going in, right? So based on this type of strategy per se, this is kind of like a technical based strategy, right? Not fundamental when you're looking at the details of the company's stock itself, right? Like how fundamentally sound is the company? Is it able to pay its bills? Is it collecting its cash on time? Is the AR good? Is the AP good? Accounts payable, right? Things like that. That would be more fundamental analysis. Technical analysis is looking at technical indicators. A lot of these are price movements over time. That's what we're looking at today. So moving averages and relative strength index. And why would we even be interested in doing this, right? There's a few different reasons. If we set up an AI, artificial intelligence agent, to go ahead and do the trading for us, we could do this in an automated fashion, continuous learning on the part of the agent. The profits can be more consistent and persistent, right? So we can make more money by our with our investments in the stock market. We can backtest our strategy, adaptability, right, and scalability if this technique is successful, optimization, and of course, risk management, right? We have a certain exposure to risk. The portfolio could depreciate in price and we could lose money. That's a huge risk, right? So we want to manage the risk pretty effectively and diversify our assets, right? So we pick a bunch of different stocks to invest in, and we probably want to do dollar cost averaging as well, right? So every month or every pay period could be biweekly, every week, every month, whatever frequency you get paid. Take a certain amount of money and invest that in the market. It could be $1,000, it could be $10,000, doesn't matter, right? But you would want to make investments on a consistent fashion, right? So every month or every 2 weeks, make that investment. That's dollar cost averaging, right? So using dollar cost averaging and diversification are two very powerful risk management techniques to help you to make more money over time. So I'm going to go ahead and pull in historical prices for these tickers right here. I'm going back 36 months in time. So there's the 36. You can change that, by the way, if you want more or less. It's up to you. You can change that to whatever you want. Here's a bunch of tickers. I think these are all the Dow 30. I commented that out. Anything with a little asterisk, not asterisk, pound sign over here, or Sharpe. It's called a Sharpe. That is commented out. So the only tickers we're looking at today are these 5. Okay, so if you want to use all of them, you can use all, or just pick whatever stocks you want. Anything that comes from the Yahoo Finance API, you have access to, right? So it can be any stock that you can imagine as long as Yahoo covers it. So we're going to go up ahead and set up a portfolio optimization environment. That's what this logic does right here. We're going to get our observations. Okay, I have a few small UDFs, user-defined functions, over here to help me with the logic and to train the agent. This is going to be a buy right here. So we buy the stock right here if we are hitting the indicators for these for the strategy right here, right? This is moving average and relative strength index strategy. So all of this code in here is important, and I will share all this code with you. I'll give it to you in the when I share the video. I'll upload this as a HTML file, and you can download it. I can do it right now. So save as HTML, and then when you go and open the file, you will have this HTML ready to go, right? So I'll upload this code, the source code, with you, so you don't have to copy and paste this and try to take notes or anything. You'll have all the source code that you need, right? So so that's it. So I'm going to go ahead and run this strategy right here. And then when all the logic is analyzed, right, and interpreted, by the AI agent right here, we're going to put everything into a data frame, right? That is going to be created right here. We create the data frame with these headers right here, or with these column names anyways. And then we package everything up very nicely into a nice data frame so we can present it, and then plot a chart on it too. So let me go ahead and run this. This run runs pretty fast. I have a second piece to this logic that takes a little bit longer to run, and that's fine. So this is what it did. It basically downloaded the stock information right here. This is just the head of the data table that we started with. If I go back up here, you'll see that right here, display data. And this is the head. By default, it gets the first 5 rows, right? And if you get the tail, that's the last 5. So these are the tickers. That's the stock information that's downloaded and used to train the AI agent right here. And then you can see the actions that it takes. So step 1, I traded Amazon, and it's then sell it at a price of 152. And let's see, the portfolio starts with 100,000. I showed you that. So in step 8, let me see, Amazon. Looking at some of the details here. I'm not going to spend too much time on the details. Basically, it's just a log of all the transactions that this AI agent undertook to go ahead to try to generate positive returns, right, using this strategy. Again, this is moving average and relative strength index, and you can see all the details. It's kind of like a trade blotter. So all the trades or all the transactions, whether they're buys and sells, we see the price and then the impact on the portfolio right here. So you can see a historical tracker, or it's called a blotter, trade blotter. So you can see that right there. And then everything else is packaged up nicely in this data frame. So you can see the details here. Again, tickers traded and trade actions. Was this a buy or sell? Trade prices, and then gains and losses on the portfolio. If I hit Control Enter, we can see the overall return here. And I'm going to kick this off. This actually takes quite a bit of time, at least a couple of minutes, not too long. But you can see, so overall, the buy and hold strategy seriously outperformed AI trading strategy. Really, it just kind of did nothing. It's kind of flatlined here. So it started with 100,000. At the end of 3 years, it made, I think, $1,000. Is this what I saw over there? Yeah, it made $1,000. So big whoop. Okay, so this is pretty much a massive failure. The buy and hold strategy made 50,000. Started with 100, ended at 150. We can see that right over here. Right, and the last trade was 147. If I zoom in, I can actually zoom in. I should say 150 here, right? Or is it 153? I say 150. And then 101 for the AI agent, right? So I see the 101 here. I think this is just off something that's just glitching right here. It's going to go almost 150, but it's off by a couple of dollars. So anyways, you see that the buy and hold strategy seriously outperformed the AI agent's ability to learn and to make consistent, persistent returns on this portfolio. So that's okay. I tried to trade the agent, and you give it a reward, like positive feedback, saying, okay, if you create a trade that generates positive returns, that's good. Let's keep doing it. Whatever you're doing, keep doing that over and over. You're looking at this trading strategy that is a moving average and relative strength index focus, right? There's a couple others I looked at. One was a Sharpe ratio strategy. Another was looking at, I think it was mean reversion or something like that. There's a couple different strategies. The videos are going to come out today. I'm going to drop those a little bit later today, so you can check that out. So anyway, some strategies are very lucrative and some just are not, okay? And I'm telling you right now, this one just didn't perform well, and that's fine, right? You have to try it and see what the outcome is, and then we know, okay, we're not really going to engage in this behavior. It's not very lucrative at all. Really, it made no money in 3 years. It made, I think, $1,000 or something. That's nothing in 3 years. So, so we wouldn't actually use this strategy, but I'm just trying to learn this AI reward mechanism stuff and train an AI agent on how to make trades automatically and how to create a trade blotter like you see over here, right? And to learn what's a positive trade and what's a negative trade, and learn right from wrong, right? So I'm just learning this stuff. I just got into this about 6 or 7 days ago, so I'm just sharing my findings with you. But I'm going to keep going with a few more strategies I have in mind and try to find one that is very lucrative and one that we can all get behind and profit from, right? But this one is just not that. So let me try just one more technique now. This is called a PPO strategy or PPO technique. So the first time we didn't really use this, right? In my research, I found that there's a PPO that actually is kind of well suited for these AI agents to learn from. So over here, we did not use a PPO. Down here, we're going to try sort of a different approach at this point and use this PPO technique to try to generate higher returns on the portfolio, right? So everything is pretty much the same. We're still using the relative strength index. Here's the RS right here, relative strength. We're looking at some logic right here. This is probably the most interesting part of this code right here. We're looking at the delta. The gains are the rolling windows with a minimum period of 1. It has to be a slight upward gain right here to be recorded as a gain, and minimum period 1 there where the change is less than 0. Okay, so that's a down move in the stock price, and this is an up move in the stock price, right? So we're taking these ups and downs, trying to get these moving averages over time, right, and see how everything plays out, and then get the relative strength index based on that, okay? And then again, we're using this PPO technique over here, so hopefully that is going to give us slightly better returns. So I packaged up everything just like before in this nicely arranged data frame. And this one is doing a different technique because of this PPO. I have some notes down here when it's doing. So the agent is actually learning, and every time it learns something, it prints out a stamp here. It makes a stamp of what it has done. So you see entropy loss, explained variance, and you can see all of these definitions are described down here. So I'll give you those in my notes. I'm not going to take you through all that. But you can see the agent is trying to learn right here, make sense of these. And again, it's creating a trade blotter where it's saying, okay, on this day, what was the transaction? Amazon was traded. This was a buy or a sell, whatever it is. And then the AI portfolio was adjusted accordingly, right, based on what the agent is doing at that point, right? It's automatically trading on that 100,000. And we get down here and we can see, in this case, it is better, right? 4,000. So it made 4,000, and in the other scenario, it made only 1,000, but still the buy and hold strategy far outperformed the agent's ability to learn this stuff and to make trades. So you have a slightly higher return over here, 4,000 gain after 3 years, not a whole lot, but a little bit better than 1,000, that's for sure. And then the buy and sell was exactly the same, right? All it's doing is investing the 100,000, spreading it across, I think we had 4 stocks, right? No, 5. I think we had 5 stocks, and holding that until 36 months has transpired, right? And then we get that. So that's it. And here's a couple more notes here. So the AI agent does tend to perform a little bit, I wouldn't say random, but it is a little bit inconsistent every time you run this. There is a consistency and a performance impact, right? So the AI agent is going to learn slightly better, slightly worse each time you run it. It's not going to be exactly the same, right? Because the agent has to relearn every single process every single time you run this, like a human being learning, right? Like you and I learn new things every single day. You take what you've learned in the past and add that to your long-term memory. But you're constantly learning new things too. And with this agent, it's kind of the same. It's constantly learning new things, right? So it will be a little bit inconsistent. There are negative daily profits and losses that have to be accounted for, right? So those will shift the portfolio value up and down a little bit. There is some erratic trade behavior. The market is inherently erratic by its very nature, right? There's a reward function being issued to the AI agent, right? As it's learning more and more and making positive trades and making money, we're rewarding it and saying, okay, keep doing this. If it's losing money, we're giving the AI agent a punishment and saying, okay, stop doing that. That's bad. Don't do that anymore, okay? So this training, data, and exploration considerations and hyperparameter tuning. Now, I did not do that. We can use some machine learning techniques to try to improve the ability of the model to learn and to make better trading decisions and boost the performance of the portfolio's returns over time. But I did not do that. That's kind of a different, totally different approach. So that's one thing that we can consider in the future. But I'm just looking at the moving average and relative strength index in this scenario. So that's it, guys. Hopefully that was useful and insightful. I'm going to try a few more of these AI agents and try some different learning techniques and a couple different investment strategies, and I'll report my findings. I'll keep going until I get at least one that performs quite well so far. I've tested 3, and they're all 2 of them are kind of mediocre. This one was kind of just an outright failure. Okay, so this agent really is not learning based on this strategy of moving averages and RSIs, but that's fine, right? We do that to see what works and what doesn't work, and we know this doesn't work, so we won't pursue it. But it's an interesting undertaking, nevertheless, right? So that's it. I'm going to wrap it up here, and I will see you in the next video. Bye.